Network Weekly, some of the finest professionals at Talk Shop. She is the host of the Real Estate Mortgage Shop, an iHeart Radio show, locally airing on News Radio AM 600 WREC 92.1 FM, and on her podcasts and blog posts, which can be found at www.joegarner.com. Pick up her book, Choosing the Right Mortgage, the quickest way to the life you want, at Amazon, Barnes & Noble, and on joegarner.com. It is a mortgage guide for real estate professionals, but it is easy to read with stories of real people with real dreams and challenges they have to overcome. Let's give it up for Joe.
Thank you, Lynn. I'm going to be introducing Lynn in a little bit. Right now, I'm just going to pass the book around so you kind of see how it's set up. But anyway, I was talking to somebody the other day, and he said, Joe, you know, I don't know why my credit card keeps getting declined. He said every time I check online on my online account, it says that my balance is outstanding. That guy probably doesn't have a very good credit score. But today we're going to talk about protect your money, how to improve your credit and your insurance, and why do we need a high credit score? Because the higher your credit score, the lower your cost to borrow. And these people in the room, you and people we know, are actively buying cars, buying a house or two or three or four, right, Sherry? We're refinancing, getting cash out. We're financing business deals. We're all of that. We're constantly borrowing. And a really high credit score on the FICO 8 for mortgages, it scores a little lower than what you see on Credit Karma. But that good score is like 780 to 850. Now, if you get like 750 to in the 770s, you're still really good. You're still going to pay not too much on your borrowing costs. But man, when you get down to the 600, y'all, it becomes very expensive to borrow money. So let's talk about how to get our score a little higher. Many years ago, I had so many clients that had credit problems back then. And I called Equifax. I said, guys, is there anybody that can help these people directly? Because there was a lot of problems with Equifax back then. And she said, the best site ever created for knowing how your credit score is devised is myfico.com. So you can write that down. MyFICO, that's FICO.com. And this information came right off the site. I've got a whole lot more in the book on chapter 15 that we don't even have time to cover today. But this is scratching the surface. 30% of your credit score, did you know, is made up by how much percentage of your credit limits you use on revolving credit. Do you use over half of your credit limit on your credit cards every month? It's even though you make the payments on time, it's taking points away from your credit score because the credit scoring system does not like you to use, but only a very small portion. They want to see that you're only using a very small portion of your credit limits on revolving credit. So how do you play the game? If you can keep every day of the month, if you can keep the balance, the usage under 30%. So if you had a $1,000 credit limit, you'd never ever want the balance to go $1 over $300 at any time during the month. That's actually going to put points on the board for you. Now, if you're in a hurry and you really want to kickstart your credit score, you can show that you use less than 10% of your credit limit. So if you had a $1,000 credit limit and you showed that your balance never goes over $100, you're going to get even more points on the scoreboard for your credit. Now, here's an interesting fact that a lot of people don't know. Even though you're making the payment on time, if you use over 50% of your credit limit, you have a $1,000 credit limit and it goes to 501 or 510 or higher, they're actually going to take points away from your credit score, even though you're making the payment perfect. How do you get around that? I've had clients that say, well, I want to have my funds available to buy the house. I don't have funds available to do that and pay down my credit cards. Well, here's a little trick that has worked in the past. Just call the credit card company and up the credit limits. You up the credit limit, now you don't have to pay down a lot, and now guess what? You're under 30% usage or 10% usage, whatever that is. It's a little trick to put in your hat, under your hat. Let's look at the biggest effect on your credit score. Of course, you need to make your payments on time. Now, a lot of people freak out and go, oh, I'm 15 days late, I'm gonna have a late payment on my credit report. No, you won't. It's 30 days. You just don't want your payment to get posted 30 days late. Don't mail it on the 30th day. Make sure that it gets posted on the 30th day or sooner. You don't want to go over 30 days late. That's 35% of your credit score. All right, let's look at some other factors. Length of credit history. 15% of your score is how long do you have these accounts. So I've had people call me and say, Joe, I paid off all my bills and they canceled all my credit cards. So I'm like, oh, no, don't do that. Please don't do that, especially the older credit cards. If they're older than 6 months, hey, if they're older than 5 years, they are seasoned and they're going to give you more scoring, more points on your score. So keep the older accounts, use them with very little percentage usage, and you will see your credit score soar. New credit. You go down to Kohl's or you name your store and they say, hey, you've got a big purchase here. If you'll open up a credit card with us, we'll give you a 10% discount. That may be fine if you're not planning on buying a car, buying a house, refinancing, or doing some financing for your business. That may be fine, but don't do it if you think that you're in the next 90 days or so going to be borrowing some money, because it's only 10%, but it makes a difference. It might take you down under a nice price break. 10% credit usage, credit mix. All right, here's another little known fact. If you use a finance company instead of a bank, if you use, heaven help you if you're using payday loans, but some of us know people who have had to use payday loans. Their APR, if you calculate it, is 400 and something percent.
Oh,
APR. Kid you not. Kid you not. We did an actual study on that a couple of years ago. If you're using payday loans, you're using finance companies, even though you're making the payments on time, that can hurt your credit score. So last one is stay away from 12 months, same as cash. Boy, it sounds so good. Hey, you can go 12 months and you don't have to make a payment until 2025. Don't do it. Just say no. Because if you're planning on borrowing money in the next year, a 12-month same as cash scores as a brand new account, so no length of credit history. That's going to hurt you. And it scores as a maxed out credit card, which is 30%. It's going to kill your score. I've actually seen people say, well, Joe, I bought my furniture. I'm getting ready to close on my house. I'm like, oh, because I've seen it drop scores over 60 points. Overnight. Wow. So don't buy your furniture until after you buy your house. Don't buy anything until after you close on the house. Right, Sherry? Right, Pat? You can go shopping, but don't add any more accounts. All right, real quick.
Don't let them run it either.
Right, don't even let them run it. Right. Okay, next. All right, in the book, I tell the story of Sam and Sally. And Sam had really messed up his credit when he was in college and had racked up all this credit card debt. We had to work on Sam's credit because him and Sally were getting ready to expand their family. And so they did not want to be in the cramped apartment. We had to extend credit limits out so he wouldn't have to pay a big chunk of money to get his credit card usage down. We had to do that. That helped him within a month and get that usage down under 30%. We had to do a few other things with Sam, which you can see in the book. If you get the book, his full story is there. Sally did not have any credit at all. So hers was easy. Her parents had an old credit card that they used very little of the credit limits, and they just put her on as an authorized user, and voila, in little over 30 days, Sally had a nice credit score. So we were able to get Sam and Sally in the house pretty quick. Just an idea. Next slide. Sometimes some of our best friends, besides your mortgage officer and your realtors, are people who have already had credit problems and come out of those. And again, I've got stories of people in the book that you can get to know them. And of course, you probably know some people right now who are like Terrence and Tamika. Next slide. So here's some tips to sum up. If you know somebody or you are that somebody who says, you know, I really need to get on this, get my credit score in tip-top shape. The first thing I would do is say, call me. You don't have to buy the book. You don't have to get a mortgage. I am happy to help you as much as I can to get started getting your credit scores at their optimum level. If you do want to go further, I would say, please purchase the book. I think Amazon has it on sale right now, and you can even get the electronic version of it, which is much cheaper, but you'll have it to give to somebody else when you're done. You can say, hey, I know this, if you'll just read chapter 15 in this thing, or this chapter and that chapter, I really believe it'll help you. And now, not only have you helped yourself, but you've helped somebody else that you care about.
But we know you and we want to sign the copy.
I can do that, Carla. Number 3, I would say today or tonight when you get home, go to annualcreditreport.com. It is free for you once a year, and for a while it was more, they let you do it more than once a year, but check for errors, make sure nobody else's credit's on there that's not supposed to be. Check your balances versus your credit limits on your credit card, kind of take your own temperature. You can check all 3 credit bureaus. And if you want to go a step further and protect your credit, you can go to these sites, and I will leave it up here for you to see. Equifax.com, Experian.com, TransUnion.com, and Reeves or lock your credit so that nobody else can go in behind you without you knowing it and put credit in your name. Do you guys have any questions before I introduce our next speaker?
A quick question, there are some fly-by-night, for lack of a better term, credit repair companies. Would you recommend going to the Better Business Bureau to check them out?
Next slide, please. I'm sorry. Would I recommend what?
Them going to the Better Business Bureau before they sign up with a company that may or may not actually help them?
That's a great question, and I want to be careful because there are some legitimate credit repair companies. There are so many right now that are not going to give you the results that you desire. I'm working with a client right now, and she paid them almost $4,000. She's been waiting for a year to do something, and they've been sitting on her money. She finally was able to get her money back. We used it to pay down credit cards, and I said, look, let's just do this. I'm not charging you anything. Let's just do this together. So that's what we're doing. So I would say, if you can, go to myfico.com and go to annualcreditreport.com. Come to somebody like me before you pay thousands of dollars to somebody else. Good question. Anybody else? Yeah.
So if you're using, like, we have a credit card that we use that gets mileage and, you know, things that help us with hotels and travel. So if you're using it for pretty much anything that you would purchase throughout the month, then we pay it off, like you said, at the end of the month every time. Would you be better off like halfway through the month to make a payment to keep it where your percentage is lower than the like 30% of the card or whatever it is, 50%? And we're not getting ready to buy anything. I'm just asking for the.
Yeah, you could. You
Okay.
could, but you could also just raise the credit limit so you don't.
Okay, so
You could just
either way.
use it the way you normally use it, and it's always under 30%.
Okay.
But good question. Anybody else?
If someone does go to a credit union company, what would, and I know you can't give an exact number, but what would be an approximate good amount to pay without overpaying?
That's a great question, Pat, and it depends on how much damage has been done on there. I know one thing they say is, we can get rid of bankruptcies, we can do all that. Well, you know, sometimes they can, but you can too, because if the creditor did not, or the paperwork did not get filed correctly, but under the Fair Credit Reporting Act, you can contest it, and if they can't come up with the paperwork, then they have to remove it in about 60 days. So yeah, you can do a lot yourself of what these credit repair companies claim they can do, and you do it for free. So disputed accounts, one thing that they'll do is go in and dispute a bunch of accounts, but when you go to buy a home, guess what? They're gonna ask for all of those to be undisputed. And when that happens, if it's negative, they start scoring again. So it can take you down overnight. So be careful. Yes, sir.
And you correct me if I'm wrong, but also, if you're like going out to shop for a car or something, don't let them run your credit until you're actually ready to buy the car. Because every time your credit gets run, it'll pull you
Well,
down.
let me speak to that before I introduce Lynn. In 1998, Fair Credit Reporting Act allows you to shop for mortgage companies. You can shop for 30 days if you want to and try this mortgage company, that mortgage company, as long as the inquiries are being pulled by the same merchant code mortgage. It shows up as an inquiry but doesn't score, but it's one hit on your credit. Same with cars. The only problem is car dealerships will sometimes pull it and then they send it over to a finance company that pulls it. Those are two different merchant codes. So be careful with that. But y'all are awesome and I'll be available after Talk Shop. I want to introduce our next speaker, and this lady, she is a model for customer service. She loves big and she serves well. Her name is Lynn McDonald. She's had 36 years career in Allstate Insurance and has owned an agency in Madison, Wisconsin, and one in Germantown, Tennessee. In 2004, Lynn sold her agency, and her husband Troy asked if she'd like to come piddle around at his agency.
Huh.
Well, she's been piddling around in the family agency now owned by Troy's son, Aaron. Both her and Troy were like top producers, like 5 states around. I mean, they were knocking it out of the ballpark. Lynn's main goal is to protect her clients' assets by making sure that they have the right coverage. She has a heart as a teacher and actually has taught as a volunteer at United Housing for, since, let's see, more than a decade. It's been 10 years. It's over 10 years.
I think 15.
Yeah. And in 2001, Lynn and a realtor friend started Greater Memphis BNI, which is now the largest chapter in the Memphis area. I mean, awesome. She is married to the very funny, very famous Master of Ceremonies and also top producing. He has been a top producing insurance agent, Troy McDonald. They met in 1995 at Line Leaders, where the top 2 agents from each state exchanged marketing ideas. Between the 2, they have 5 wonderful adult children, 13 grandchildren, and 2 dogs. The motto fits. You're in good hands with Allstate. Lynn McDonald's.
So Joe, what you're saying is we traded more than ideas.
Why don't you go right to the next screen? Okay, and the next screen. Okay, you all have a sheet of paper in front of you with this quote, and I apologize that 1131 at the bottom doesn't show up real well, but that's a real number. This is a what if quote. This is somebody, well, I'm gonna steal my own thunder here. We start out the home buying class, brand new homeowners to be, with this screen because it's shocking. Okay, go to the next screen, please, Tim. And the next. Can you read that number at the bottom? $4,248.70. This is an identical quote. Can you imagine what would take that first quote, a little over 1,000, to $4,000? One item. Credit. And people's jaws drop. They cannot believe that credit has that big of an influence. The insurance industry uses credit as an indicator, not whether you're going to pay your insurance premium, but claims. There is a direct correlation. The better your credit, the fewer claims you present. People who pay their dues or bills tend to lock their car, take good care of their repair a roof before it's pouring down on them. So the whole credit industry, or excuse me, insurance industry uses credit to one degree or another. At Allstate, we never see a credit bureau. all we see is number 1 through 50. That first example was somebody that scored a 1, probably never paid a bill late in their life, wonderful credit customers. This is a 50. We don't see many 50s because they don't make it through the mortgage process. Their credit is damaged that much. Now, I also want to talk about what Carlin said, don't let people run your credit. When an insurance company runs your credit, it is a soft hit. It does not ding your credit. So if you're buying a new house and you want to test out 10 different insurance companies, have at it. You know you have all had soft hit credit. I bet you everyone in the room. If you ever got an offer from a credit card company, they have done a brief check on your credit history, and that does not hurt you. A few other things about credit. When Joe gets a couple in front of her, a married couple, I'm imagining this, Joe, you probably say, Mr., Mrs., between the two of you, who has the better credit? And you probably already know, but usually one hand goes up and the partner goes like that. And you are lucky to do that. I'm sure, Joe, what you tell them is, Mr., Mrs., don't worry, both names will be on the title. Mr., just because your name isn't on the mortgage, you have full ownership of the house. She can do that. We cannot. And so when we get a couple, it is a blended credit score. And just a little marital tip, before you get married, it would not hurt to have a conversation, not only about your credit scores, but your driving history. Can you imagine having a spotless driving history and marrying somebody that's had 5 speeding tickets?
Manny, are you listening?
So the insurance company, we're gonna blend that too. When we do this credit search on you, the agent, the agent never see anything but that number 1 through 5. But as Joe recommended, be sure to, you can get a free copy of your credit just by contacting us. We would give you a transaction number, how to call the company, so that you can do exactly what Joe said, look for errors. Now, another thing is your credit score is a snapshot in time. If you go home tonight and look at your credit score 6 months from now, hopefully it'll look even better. So a very important question to ask your insurance company is, since you use credit to come up with what I'm paying for my insurance, what if my credit improves? Would you be willing to rerun my credit to see if I deserve a better rate? And the answer should be yes. And you don't want to have them run it in a month, but a year from now, maybe you kind of forget about it, and 3 years from now you see a credit score and go, oh, I better let my insurance company know so that maybe I'll get a better rate. And I don't think you'll mind me using his name, but one of our BNI members who's been a loyal Allstate customer is Lloyd Caldemeyer. And Lloyd Caldemeyer stood up one BNI meeting and did a testimonial that when we reviewed his Allstate policy that had been in force for many years, he saved hundreds of dollars because his credit had improved. One other tip with credit is, do any of you do ACHs or electronic drafts? I think that is the smartest thing. You don't wake up in the middle of the night going, did I pay that bill? And it's automatic. And guess what? It's automatic every month. You're paying on time, the right amount. You don't have to think about it. You don't have to worry about the postmaster losing it. So I would surely recommend that. Would that not help them, Joe? Over time, that perfect payment history can only help. So you might want to check with your own insurance company, see how credit is affecting your rate, and make it a goal to improve your credit and get a better insurance score in the future.
All right, any announcements? Taylor, do we have a green screen session coming up?
Not right away, but, in a couple of weeks ago, yeah. In
All
the
right.
middle of May.
So we have a think tank coming up next week. We're not sure what the topic's gonna be. So if you have some ideas that you wanna hear, and you have somebody that's a professional even that wants to come in and share with us after Talk Shop, just for our sponsors, let me know. Otherwise, there is one that I love to do, and it's called How to Talk to Anyone. And it helps you with persuasion when you're doing a one-on-one. And if we don't have any volunteers for the topic, we'll do that after Talk Shop next week if you're not doing the green screen.
No, not.
Okay,
You're an expert in that.